All right, let me look. How you guys doing today? Sad news with Kobe nuts. Too, which is craziness. I can't even think about that shit right now. You never know when it's your time, my friends. All right, so let's see what let me just add one more, actually a couple of things I wanted to post. So give me 2 seconds here so we could look at them. You guys could take a peek at futures. Hang on, what'd I do with this shit? All right. I'm glad to see a decent amount of people on the webinar tonight. There's been too much fusion amongst members of late. I don't like to see too much confusion. All right, hold on. What'd I do? Let's see. Through. Bear with me, guys. 1 sec. Oh, might as well just send this out too while I have it here. All right, we got a couple key things. We just want to go over tonight. So we're not going to really run through like we do a lot of times, all the indicators, really, too much sentiment. We don't want to overdo it. There's a couple key things to focus on. No reason to cloud our brains. Oh, he sent that for me. Good. Okay. I'm going to put the sector. I wasn't even going to throw the sectors out there just because it's earnings, but something I think it's worth paying attention to anyhow. May not be as of a because of earnings. Take a peek at it. Let's put it out there. I see some late stragglers strolling in here, so get in. Here's sectors. Okay. And I'm going to do world markets, and we're done here. Okay. Now we're cooking with gas. That's my easy answer too, MJ. When my daughter's hungry, nobody's around, my wife's not around, have some cereal. I'll cook you up some cereal. Yeah. Easy. My daughter's really picky eater. Pain in the ass too. All right. We got a few new members. Welcome everybody. Like I said, I'm glad to see more people than usual on the webinar tonight. I wish we were looking at this number, for the last couple of weeks. Always when there's a little bit of turmoil out there, that's when people start paying attention. Get, a little late at that point, but all right. Into things, just to a couple things to rehash. Okay, first off, if you just are a member, period, whether you're on private Twitter or in the room, okay, you currently have access to the Wall Street Jesus. Basically, you don't even need a password yet. Okay, I haven't done anything where it's locked or anything. I have the capabilities of doing that. because I want to make sure I do it right if I do it. Okay, but if you go to market updates, I post, some of the action we saw that particular day, some sentiment stuff that maybe we don't look at every day that I find somewhat interesting. But more importantly, okay, because I understand fully that not everybody can be around during market hours, right? They have what went on throughout that particular. They don't know what the market did for that day, let alone what flow looked like, what sentiment looked like, what is gamma and our interpretation of gamma for that particular day. That's understandable. Nobody expects you, to have control over all these things, especially if you're not at your desk. So what I made it my business to do, basically every night, right, post market, sometimes before the open, sometimes both. Very rarely I won't post anything unless it was a completely useless day and I got nothing to talk about. Okay, but I posted to private. I posted in the room. I have trouble posting the link to the room. Okay, but everybody has access to private Twitter and access to this site, the WallStreetJesus.com site. Okay, and quick, easy to read post. Okay, see, not too complicated. How I roll, right? I'm not McElliott. I'm not going to come across like I'm talking Yiddish, right? I'm basically just giving you my interpretation of all the things we look at throughout the day. Okay, so you don't have to be too preoccupied with paying attention to all this stuff. That's why you're a member. Okay, so if you're unaware of something that's important, right? It's on you. I don't mean this in a mean way. I'm being honest, right? If you're unaware of something we've been talking about on webinars and you haven't had the time, you were busy to come on the webinars, or you heard of it but you never really took the time to understand it. There's only so much I can do, and this is the easiest way. So if you put earplugs in your ears and a blindfold on, and you just read this at the end of each and every session, you'll get a feel for anything of importance that went on. Okay, if there was something of importance, maybe there was nothing going on that day. Okay, but even more importantly is the whole gamma end of things, where a lot of people get confused and in a rude way. But if you are getting confused, chances are you haven't approached things with an open mind to give it a shot to understand it. Okay, or you're trying to understand it, you're trying to dive too deep into the situation and want to know every detail about it. Okay, we use it in a very simple way, and that's how I talk each and every day, right? As far as our interpretation on the signals coming out of gamma. All right, everything else that you do on your time, about on the side or whatever the case, that's like the cherry on top. That's an added bonus. But if you're having trouble with the basics, I would recommend, and I wouldn't advise you of taking the next step and trying to deep into gamma or anything else for that matter. Start with the basics, master that, fully understand that, so where you don't even have to give it any thought, and then you could take it to the next step. Okay, but the reason I say this, you guys know we were talking about it, right? There's just a lot of members, and they're not trying to be, wise asses about it or anything like that, but there are a lot of members who've been members a long time, and we'll talk about, somebody will mention in the room, oh wow, gamma has been signaling that for 2 weeks now, or we were talking about that on the webinar for 2 weeks now, and it saved us, or it played out perfectly. And then there are members who have been members for a long time who have no idea of what we're talking about. All right, so I'm actually being nice. I'm telling you, not paying attention to this stuff, you shouldn't be a member. What are you a member for? For the alert board in the room? I can give you a scan and you can get that information. You don't need me or I'm being honest with you. You don't need any of that. You don't need to come out of pocket to have a scan, an option scan that picks up large orders. So you're in the room and you're paying a membership fee, okay, for this. For me to break down all the information that we look at on a day-to-day basis and to give you as simple as an interpretation as I possibly can in English so it makes sense to you, right? And then it's on your lap and you have to fit it into your style of trading, and the do's and don'ts, okay? But that's what I'm saying. No matter what you're doing on a day-to-day, if you're not this stuff, and I'm talking to you guys, but a lot of you guys out there are on each and every webinar. So I don't mean you, but anybody out there who, I don't see on these webinars or I'm not speaking to me. If you're quiet, it's fine. But if you're not aware of what's going on, there's only so much I can do. All right. And if you were not to pay attention to an alert all day, I think this is even more important at the alert if you had to do one or the other. I'm being honest with you. All right. So on that note, I wanted to do that not only to rant about members who may not be paying attention, but we had a few new signups over the last week, and I want to stress the importance of this to them as well. Okay, so you can get it right in the market update section on here, on private Twitter, and a lot of times I post it in the market update section in the Steam room, but I've been having trouble with the links, so you can't click on it. All right, but there are two other places where you can get those links. All right, so just to catch everybody up to date, all right, so for whoever hasn't been paying attention or if you're new, all right, basically what we've been talking about, and we like to call it the playbook, right? That's what we like to label it. We call it the playbook. Each and every day, each and every week, we gather the evidence, right, on the stuff we have confidence in, right, the stuff we think moves markets or has the capabilities to move markets. We gather that information and then we look at it without having a bias and try to interpret those signals, right? And what we were talking about probably over the last week plus, okay, for the first time in a long time, we were starting to lose some of the more important things that have been pillars of this rally, okay? And just to run through them quickly, each and every one of them, right? So sentiment, we had quite a few signals that have been hot, right? The run-of-the-mill CN, they've been hot already. This market has rallied. We haven't really paid much attention to those, but some of the other ones were starting to creep up to bullish extreme levels, okay? So again, that's just one main piece of what we were paying attention to, okay? Another one that's really important, okay? We were talking, and probably one of the most important, if not the most important, sweeper activity, okay? Sweepers flow in general has been incredible, has been broad action. They've been buying everything. They've been rotating sectors, everything you wanted to see out of a rally to have some confidence in the stability of that rally we were seeing, okay? Then a couple things happened. And I think probably the most important thing that happened was just the timing of where we were more than anything else, meaning we were approaching earnings season, okay? And we already know, right? Forget about rallies, forget about where the market's been, take none of that into the equation. We already know when earnings season's around, the flow is abysmal, okay? Not even bullish, bearish. You can't get a clean read out of it, okay? And when you don't get a clean read out of it, it's useless, all right? That's a signal to us, as a matter of fact, not to do much, right? When we can't make sense out of stuff, it's a signal not to do much on either side, long or short, all right? So, but as we were entering earnings season, we started to see the flow really deteriorate, okay? Meaning a lot of blocks, a lot of a lot more protection than what we were seeing, all that stuff. And, the fact that we are coming into this earnings season off a huge rally and some key components looking like this, basically parabolic, for Christ's sake, okay, it would only be normal to see an uptick in puts, protection, stock replacement. A lot of blocks are stock replacement, okay, in simple English, meaning somebody liquidates an equity position and instead takes a lot less principal risk on some calls, so they still have exposure. All right, so that's totally all right, but that's not the point. The point is, that's another key signal, right, that had us confident the rally still would have legs, that the rally was healthy, put it that way. Okay, at no point in time it continued to go higher did we say, oh man, flow is not looking too hot. This market keeps going higher, but the flow is not looking too hot. Not one point in time, right? We were oohing and ahhing over a lot of the action for the majority of this rally. All right, so those are two main things, right? Sweepers and sentiment, pretty much that's enough, okay? And then something new we've been following a lot lately is that whole gamma situation, okay? And whether you want to believe in it or not, anybody who knows or understands the mechanics of this game, okay, will acknowledge, right, whether they trade off signals coming out of gamma or not, even if they don't follow it on a day-to-day basis, they will acknowledge that gamma has been a significant pillar and piece of this whole melt-up. Okay, the reason why all geopolitical turmoil and all this stuff would get hit off a headline because of algos trading off it and then bought up and retraced like it never even existed. The majority of that is gamma, okay, and the positioning. So if you remember, okay, and if you're new, you're not going to remember, but those of you who have been following gamma, throughout the rally with me, you remember when things were when we first started to look stretched, right? And a lot of people had interest in, not even shorting, but shorting, trying to catch a top, buying protection, and we're interested to see if gamma would start deteriorating, right? Got to a bullish extreme and would roll over and open up a window for volatility. If you remember what the gamma gang, the people who know a lot more about gamma and how it works, were telling me and what I was sharing with you of what the likelihood was going to happen, how gamma was going to play out off such a significant rally like we saw, okay? And to refresh your memory, they mentioned to me that rather than the big deterioration and whoosh lower, right, where we would see a big chunk of gamma get knocked off, because of the magnitude of this rally and how big of a part that gamma played in this rally, we would see gamma get slowly chipped away at, right? Remember me using those words, chipped away at? Like, you know me, there's a new term and I drill it home almost to brutal annoyance, right? Chipped away, right? Chipped away at. So in simple English, what that meant was rather than the deterioration in gamma and where window could open rather quickly and you get those reversals, it would be more about time, that over the course of time, they would have to take cracks and chip off that foundation, that powerful 2.5 billion. Remember we used to see those guys 2.5 billion in positive gamma, okay? That it would take time, and little by little, we would see gamma come down to 2 billion, right? Then come back up now to 2.2 instead of 2.5. Then come down to 1.7 billion. Then now the top will top out at 2 billion. Then come down to 1.5. And if it's hard to pay attention to it, or because it's not really actionable to pay attention to it as it's going on. But now if you look back, think about, throughout the latter stages of this rally, how Gamma has just did exactly what they were saying. Okay, we would run into stickiness, if you remember, at 2.5 billion, and over the last week, we couldn't get up to 2 billion in Gamma. Okay, as a matter of fact, look here, right on this here, this thing doesn't even go up that high anymore because it caps out at less than 1.5. All right, so this was another major piece. Again, not really telling us much about the downside, right? It didn't tell us much about the downside, but told us that the upside potential would get a lot more difficult, right? The upward price action during market hours would become a lot sloppier, messier, fades, okay? Because what would happen is every time, this is how it looked over the last like week and a half, right? See this dotted line? That's the close, okay? And if you remember, we were talking about this. The dotted line would literally be right outside the sticky area. Remember we were talking about that? So if the market went up a little bit, we would be right in the sticky zone. And that sticky zone's where chop and fade and all that stuff comes into the equation. Okay? You see the difference now because of the pull? You got a little more room, right? Between the closing price and sticky. All right, but for the last, even call it 2 weeks, probably a week and a half-ish, that sticky zone was right up in our face. Okay, so once we started to see this, right, along with deterioration in sweeper activity in the flow and earnings flow starting to show up, and sentiment, even some of the longer term sentiment signals starting to heat up, right? You put that all together and it tells you that the risk reward from this point, meaning again a week or two ago, just wasn't that appetizing. Okay, why would you stick your neck out in any sort of big way, right? If your signals are telling you that the upside at best is going to be a lot more difficult, but the downside is alive and well, right? That's not too appetizing. So that's why we had come to the conclusion, right? Again, the playbook is the simple way we label it. Any positions we're holding on to, you want to hold on to those positions, make sure you roll out and you have enough time to absorb a pullback. Okay, and make sure you give it thought. It's a lot easier to say yes than sitting through the pullback. Okay, you don't know how deep the pullback is going to be, maybe days, maybe weeks. Okay, but if you want it to be in that name, make sure you go out for a decent amount of time so you can get through that at the least. Right? I even mentioned, add, maybe it's a name you would like to add to if it does get hit. That would be a candidate to a name you want to hold. Okay. If it doesn't, you should get out of it right now, is what I mentioned a couple of weeks ago. Right now. Don't try to milk a little more upside a couple of days, weeks. There's no reason for it. If you're not willing to get stuck in it, get out of it right now, build a cash position, and wait for our signals to not only a better setup out of that, wait till we get through at least some of earnings season and we eliminate that risk, which is just another added risk on top of everything else. All right. So that was the playbook. But in the meantime, waiting for better things to come around, there's still things that can be traded out there, right? There's still things that we can trade intraday, right? We could flip the next day if there was momentum. But now you want it to have a more tactical approach. Okay, if you can use stop losses, make sure you use stop losses, right? I know like a lot of people are probably saying, well, I always use stop loss. Well, not really. Me, myself, if I'm in an option position for a swing, a lot of times my stop loss is 0. All right, so now any other swing that I was going to take from that point on, in calls, I wasn't willing to ride to zero. Okay. I was looking to, and this is basically the point we were trying to get at. We take what the market's willing to give you now and don't worry about the further upside. Okay. Because nothing's around now that can hit this market. But again, that's what we think. There were things around to hit the market, but you had other factors at play that just made it look like the market didn't care. Right? You get that saying from the retail crowd. The market doesn't care. The market doesn't care when Gamma is sitting at a 2.5 billion strong. You know, the market doesn't care when the Fed is pumping liquidity and throwing out another round of QE. The market doesn't care when sweepers are buying any little piece of weakness that shows up and there's not a put sweeper to be found anywhere. That's when the market doesn't care. Okay. But as you start to lose some of these things that we've been looking at each and every day, that's when the market cares, right? And then obviously you're not going to be able to forecast shit like this. You get another SARS type virus come around here, the coronavirus. You get now, an embassy getting hit in Iraq. And Iran, we had a similar situation, a month ago when the market didn't care. Let's see now what happens. Okay. So just so everyone gets an understanding of it, that's how, that's the way we got to make decisions in this game. There's no guarantees, right? When the things we have confidence in, when they line up, right, the more the merrier. That's where we want to be most confident. That's where we want to stay loose, maybe get a little sloppy, okay? When we start to lose those things, that's where we want to pay more attention to our risk rather than how much more money can I make, if that makes any sense. All right, so that's where we lined up. We finished the week, obviously, with some selling Friday, okay? But in reality, the setup, in my opinion, right, just the backdrop to everything here hasn't really changed that much, okay? We're going to come in tomorrow. There's a gazillion things to keep an eye on, all right? But there's still things to keep an eye on. I don't see anything that should change the playbook is what I'm getting at, okay? Can there, be weakness off the open and they find a way to flip Gamma and hold it there and you get a whoosh lower? Yes, but that's something we need to see and pay attention to, right? Market opens, there's some weakness. Maybe there's put sweepers out to wazoo and carry the momentum even significantly lower. We have to see that, right? Okay. But at the same time, if we see call sweepers come into that weakness off the open in an aggressive way, okay, I still think the playbook applies where that is an opportunity for us on the long side for a trade. Okay. And now with Gamma, lingering at these levels, okay, think of it as the leash just got extended, right? So now there's going to be movement. Okay. A lot more movement than we've been seeing. And if that's the case, you can see these moves on a shorter term basis, right? And you don't need to be greedy, right? So you can stick to the playbook. And even, those of you who play both sides, you don't have to be a hero and try to short something and try to hold it through a lot of pain for 3 weeks, right? Intraday, you see put sweepers grab the ball and there's momentum to the downside, and whatever you're looking at signaling there should be some room for further downside right now. That's something you may want to take advantage of. Okay, that's a big difference than trying to line up into a short, rolling the dice into Apple earnings. Right? That's a total different equation here. So that's what it is on either side now. Okay, that's what I'm getting at. We're going into, do you see the amount of earnings, by the way? Do you see the names on the list of earnings coming out this week? Right? Anybody who tells you they have a clue market's going to look like this week, they're morons for even talking like that. Nobody knows. You know what I mean? Nobody knows. You could have the market shit the bed tomorrow and the news look at its worst, okay? And all of a sudden, call sweepers come in aggressively, buy up that weakness. Apple knocks the ball out of the park. Facebook knocks the ball out of the park. You know what I mean? Microsoft knocks the ball out of the park. And all of a sudden, we're at new highs. That's far-fetched? That wouldn't shock me one bit. So that's my whole point. You know, I have no idea. All I know, what I do know, the one thing I'm sure about is the amount of risk has just gone up dramatically on both sides. Both sides. The amount of risk you have to take to hold a swing through next week has gone up significantly. You know, so I don't know about you guys, but for me, it's not worth it. Why would I play the same way in my swing account, or if you're a swing trader or a position trader only, why the hell would you treat this environment the same way as you would treat coming out of a major correction and the start of a whole new rally where you see nothing but initial activity all over the place? Doesn't make sense. Yeah, I mean, new highs wouldn't surprise me one bit. Okay, wouldn't surprise me. So that's why, you know, at the start of this, I said the playbook to me stays the same. I think it's even better now, okay, in a way that we can stay tactical. And because of now the leash loosened up, you can see movement, enough movement to be quick enough. You know, it wasn't that easy when we were in melt up, right? You had to pay individual names. You had to isolate a name that was catching aggressive activity, had a lot of momentum, and you had to hope for the day. Now, on both sides, you know, you can go back looking at ES, SPY, TQQ, TNA, and try to catch moves if that's something you're interested in. All right. If it's not something you're interested in and you could only swing, what I would do personally is not do a thing. That's what I would do. I would sit back, relax, okay? And at worst case, you're going to get through some major earnings this week. Flow is likely to clean up a bit at the least after this week. And then we reevaluate. But if I couldn't play in a tactical way, there's nothing wrong with it. Sit in cash, relax. You're just coming off one of the best rallies you've ever seen in your life. Chill out. Don't worry about, oh, the market might pop or the market might roll over or this or that. It's one move. You're not going anywhere. This market's not going anywhere. Said the amount of risk out there is ridiculous. Okay. And like people think it's only to the downside. They're nuts if they think the risk is only downside. Right? Especially season out there. Right? And another thing too, what we're still seeing, in my opinion, we're still seeing names up and outperform. Now, there's reasoning behind it. We could talk about that. All right. It's actually rather fascinating what took place in this market as a whole, with the whole rotation thing and everything else going on. But, you know, like the software names, which was led off earnings, right? That team had good earnings and that was the catalyst basically. But you can see some individual name outperformance as well. The likelihood is to come off earnings. Okay. So for example, a FANG name hits the bed, bad earnings, likelihood the momentum is to the downside over the short term. Right? Apple's up significantly and some strength might take the whole group up. All right, but we'll talk about all that There are other opportunities. There are going to be more and more of them. Okay, post earnings stuff. That's the stuff we really want to pay attention to. All right, not only for short-term trading, but even for swings, especially when we get out of this week. Right, Netflix was a perfect example of that. Okay, and if you're not interested in trading that name, it's not a good, decent spot. You're not a fan of the spot where the name's catching action, you pass. But if it's a name you're interested in, right, you like to trade Netflix, and they tattoo Netflix, you got a trade on your hands. And that's what you're looking for here. All right. So on that note, everybody understand the playbook, right? The playbook, there's no change in the playbook, right? Get your greed out of your head, right? Don't be concerned about what you're going to miss to the upside. Feel good about what you're playing just for a trade. And this is the best way to look at it. This is how I look at it during when the playbook is what it is right now. You remember me telling you guys about this. I look at all the order flow, right? So I look at sweeper activity as just an indicator of momentum, nothing else. Okay? I don't care how large of an order it is. I don't care about anything. And I don't even care about the spot it's at because of earnings. Okay? All I care about, can that buying that just came in, is it aggressive enough for a kick in the ass? Can they give it a kick in the ass and I can get a trade out of it? That's all I'm looking for. It's yes. I'm taking a shot. All right. The answer is no. I pass. All right. So the playbook is simply stay tactical, short term. You take what the market's willing to give you. Don't turn short-term trades into longer-term swings. All right. You want to be quick, more selective. You put your trader cap on. That's basically what we're doing, right? As opposed to when things line up better. I don't know about you guys, but that's not what I do. Like when I see a good-looking bet or good-looking round of sweepers come into a name, I'm placing a bet on sweeper, right? I'm placing a bet like, oh, that guy or gal, that's a Sharpie right there, right? So I'm hoping and betting that he's right. Now I don't have an interest in that. If it doesn't move now, I have no interest. It's that simple. All right, so let's get into some of the things that make up the playbook here. We spoke about gamma, right? So here are some things to keep an eye on. You don't have to worry this, all right, because we're gapping down again, and you have ample room. So there's nothing getting in the way on the upside stickiness, all right? The flip level, this is the area to keep an eye on, all right? So if you see them press this market lower and they can hold it under here for a bit, that's where you're going to start to see the hedging come in and can add to that snowball to the downside. All right. That's where you usually see where people are paying attention to the margin selling in the afternoon, right? Remember that? It's been a while. Those down markets where, what is it, around 2 o'clock in the afternoon, you get the whoosh because of margin selling and stuff like that. All right. That's usually after gamma flips. And it's probably good for a couple of days. It works rather quickly when you get that flip. All right, it's a short-term thing. If you look at prior markets, I have a chart. You can see what I'm talking about, where gamma flips negative. You usually get, that 1 to 3 day whoosh. Okay, because what happens is, eventually you're going to get to here, right? And that's where looking for signs that a sweeper activity to play for that snapback squeeze. Okay, so those are the things to really pay attention going into this week. Okay, Can they? We're probably going to gap down. Where are we right now? What's this? Oh. Let's see. So we are currently down 34 on ES. So 32.59. Wow. So we're going to be close. All right, we're going to be close. So like right here is the gamma flip. Yep. So the beauty of it, guys, we see now we got it in real time, right? So you want to see, if you're looking for that, you want to see them. In other words, you don't want to see a gap down below it. You just buy it up. You know what I mean? And bring it higher. You want to see selling where they keep it here. And then what happens is all that hedging that we saw to the upside from market makers, the opposite's going to happen. Okay. So now they got to sell. They got to buy ES puts. They got to buy SPX puts, and they got to buy VIX. Right? Rather than buying VIX puts and buying SPX calls. So the same thing we saw to the upside, you would see to the downside. And, you know, market, it works. That's why people are on the side. It happens quick. It happens quick, right? The upside, you get like that squeeze, and then you start the ladder, right? What do they say? What's the saying? You take the stairs up and the elevator down in markets. All right, so that's the allure for the downside, the quick move from here to here, right? This is almost like a pocket. All right, so that's what I would keep an eye on. I wouldn't concern myself with this yet. Keep an eye on this level. And the sweeper activity, guys, is the best confirmation of that. If you're seeing put sweepers and they breach this, right? If you're seeing put sweepers coming in aggressively over here, the likelihood is, yeah, this thing is going south. All right, but if you see call sweepers start to come in, you know, and we're down 35 handles, you may want to wait a little bit, you know, see what the momentum does to the upside, and then reevaluate the flow. But now you have put sweepers to pay attention to as an indicator of momentum. All right, tomorrow when I go in, my plan is the sweep activity is going to tell me everything I'm doing off the open. If I see some good looking action come in, even if it's earnings, if I see some decent looking buying come in, right, like a decent pace of buying, not just one order, I'm going to look for a long entry for a squeeze intraday. All right. But if I see puts all over the place and they're not buying shit, excuse my French, you know, I'm not touching a long. I'm not even thinking about it. So that's how I get a gauge, you know, on things as far as sentiment and flow is concerned. All right, so that's the stuff on this to pay attention to tomorrow. If I get any, I get some updated info from a couple gamma sources. Tomorrow morning, I speak to a buddy of mine who's actually really familiar, trades off this stuff. If I get anything noteworthy, even names like I do, I'll share them with you. Okay, stuff they may be looking at and stuff like that. So I'll give you guys an update. Here's the gamma VIX. Okay, and you know this is the thing here. Like you could see the acceleration here. You know, once gamma flips. All right, so you're talking about this thing was dead and buried, and can accelerate up to 20 rather quickly. So we'll keep an eye on this. You know, good indication again if tomorrow's sell-off is going to be real or not. The likelihood is we're going to see some real acceleration. If not, you know, they may buy up tomorrow's weakness. We're not, I'll get into that once we're done with all this. On a short-term basis, we're not too far away from a squeeze on a short-term basis. You know, meaning another day of weakness and you're going to have a squeeze setup. The likelihood is you're going to have a squeeze setup. So we're not that far away. So they can easily come in tomorrow and buy the weakness off the open if they choose to do so. It looks pretty grim out there, but we'll see. All right, so again, pay attention. This is all stuff we're looking at on an intraday basis. If I see something that stands out, obviously I will comment on it numerous times throughout the day. All right, let's get to a couple other things over the weekend. Look at this guy. All right, so this was one of the things, if you remember, on the sentiment side that got us a little concerned a week ago. This thing was right up to basically right under the line, so officially over the line. All right, again, just telling us that positioning got a little too full off the chase. And if they get if you have that catalyst, there could be some selling because they have shit to sell. That's basically what it comes down to. They have shit to sell if they want to. All right, so this got up there. The bull bear didn't get there yet, but is at the highest. Oh, how am I gonna find it now? The bull bear is at the highest point it's been throughout this whole rally. Hold on. Yeah, figures Drunken Miller and then Paul Tudor Jones all in, telling the public all in. How's that gonna work out? Usually they get punched in the jaw. Boo. Let's see if that works. That should work. Oh, come on. Picks up every, oh, here it is. January 24th. This is it, right? Yep. So 7-1. Not quite the 8, but getting there. Getting. And by the way, their target off the buy signal is registered, if you remember last year, was SPX 3300. It got there, which was incredible. No, he didn't. Tudor said he's out. Saeed, for real? Saeed saying Paul Tudor Jones said he's out in Davos. What? Oh my God. So he just told everybody that it feels like 1999 and he did say that this virus scared him a lot, right? Is that the reasoning? We'll talk about why this virus, it is, right? Why this virus means something. It's got nothing to do with what you think, but why it's important. This is where we were prior to that 6-9 and all. All right, so this is getting up there too. Again, everything, these are the last things, right? These are the last things we were looking at. And they were getting hot on the position side. What else we got here? I posted some charts. If you want, we'll take a peek at that. Individual names. What I would look at individual names, we can talk about that. Low gamma, if you want to roll the dice into earnings for a pop type thing. Or the other way, high gamma, maybe sell on the news, buy puts for earnings. Earnings are a roll of the dice, but maybe it gives you a heads up on, the movement of the name, how big of a movement. Maybe you want to sell stuff on. Boy, Zero Hedge is, he's been talking about gamma for a while, Steven. Gamma's getting really, really popular, but for other reasons though. People use it in a lot of different ways. They try to get exact buy sell signals on an everyday basis out of it. I don't, somehow, some way. Here's hedge funds curled up, still above this red line, curled up a little bit. You can see they did some profit taking over here. All right, so market moved against. They did a little buying. It'd be interesting to see if they puke up. I'm sure they will. Unless the market just snaps right back, which can happen. Here's SPY Gamma. This is a different animal. SPX is the one that matters. The reason I like this is just another confirmation when this thing gets to negative, you're looking call sweepers. You usually have sentiment on your side. You usually have SPX cam on your side, but this actually works well as well. Look, here's the 0 line. So when this thing flips to negative, a little different than SPX. SPX is not negative when it flips in a big way to negative. When this flips to negative, you got to look for a squeeze. And the squeeze could be nice. Squeeze could be nice. All right, so that's what we're looking for out of there. Again, when they signal, I will obviously let you guys know about all these things. Another thing we want to keep an eye on is this for a short-term squeeze, right? Where is she? Wow, what the fluorescent color? I think I hit the button on the Twitter where it highlights it, and it came out a little neon here. But anyway, look, so you get another whatchamacallit, another down day, right? Tomorrow's down session. This thing's in the green. And I'll tell you, I'm coming in Tuesday looking to catch a squeeze or some sweeps. I may even play like SPY or IWM, for a flip. I may hold it for a swing, but look, as soon as I get the squeeze, I'll get out of it if it comes the next day or whatever, that sort of thing. All right. So I'm just looking for a squeeze. Okay. Because here's the thing you got to keep in mind. Okay. This could be a 10% drawdown for all we know. Easily. 8% drawdown. And it would be totally normal considering the run. I'm not saying that's the case, but it could be. All right. It's not going to just go there, whoop, one shot, and that's it. Okay. Especially with people wanting to catch a short. So, tomorrow we could get a little more weakness. People want to come in, they're all short looking for the follow through, open up, little weakness goes to green, and then you squeeze to here, right? We see it all the time, look. Right? So we're looking, these are the squeezes we're looking for here, these type of squeezes. All right? And then if we get lucky enough, a lot of times it's the flow that's going to be the main signal with sentiment, that we're closer to a bigger, larger move, right? A bottom, per se. It's really difficult to see it in the heat of the moment. Usually, because what you want, for me, my best gauge, when the flow really starts to turn, and that usually happens over the course of days. Don't happen, right? You get sweepers come in, there you go. You want to get in something for a squeeze. But then if the flow turns over the course of the next day or so, then it could be an indication, we're coming out. But this is good. This is all good. We finally got some weakness here. All right. So that was the point I'm trying to make. We could be going lower net, right, over an intermediate term basis, but we get another down day tomorrow. And what we're going to be looking for, signs out of sweepers that a little snapback is at least coming. Okay. And if we're lucky enough to buy into weakness for that snapback, it turns out to be a really nice trade. Real nice trade, because the snapback is pretty healthy. All right, so that's what we want to see out of this, or even close, here. You see them back here? These all eventually lead to snapbacks. I remember one of these things were early, because I played it, and it went down, I think, the next day, and then there was a snapback. But the snapbacks are usually sizable enough to where you cash your ticket. What else? Let's see what I got here. Oh yeah, I saw somebody who was mentioning this, Gordon. Here's the Sharpies, and they're floating around there a little bit, right? So they did some selling down here. This is the commercial hedgers weekly. All right, so they're here. We want to keep an eye on this, right? We definitely want to keep an eye on this. These guys are awesome into lows, awesome. So we definitely want to keep an eye on that. This was, what low is this? Oh, this was the low of two. Look how little that looks compared to this, right? Jesus. This was Fed tightening. This was like probably what we're seeing out of this. This was the volatility panic attack off the melt up. Right, but this should be action for all of us here. Yeah, yeah, but you see how quick it happens, Trey? Like, look how fast this happened like that. So you're like, oh, this can take a while. Sometimes they'll just buy, it looks like almost they're trading it. They'll just go all in, right? And then they catch a squeeze and they come out of it. Like, this squeeze doesn't look like much, Tree, but this was a big squeeze. This was a big squeeze. So yeah, if we see this into green, that would be a great sign. And it usually will flip. It almost always, I didn't put the, oh, here, it's on the thread. That's why. Here are the riffraff. So it usually always lines up with this. So the riffraff got long, late into the rally. It looks like they spit them up a little over the last couple of weeks. So you see, usually it's the complete opposite of this, and that's why the Sharpies go long. So we want to see that down here. Oh, doesn't it feel good, Tree, just to pull these charts up again and talk about potential buy signals? Feels like an eternity, no? And that's the thing. Yeah, exactly. That's what, Tree, you should feel good. You're like, I'm not even kidding, maybe the 10th person over this weekend that mentioned that they have a cash position. Cash. They cashed in some chips, they got some cash, they're holding on to a couple things, but they have some cash and they're willing, to fire whenever that time comes about. But again, I want to stress that we want to think squeeze first. You know what I mean? That's what we want to keep our minds on right now. Squeeze first, and then let flow and other things convince us that there's something larger. Good, MJ. Something larger is at play, So we want to think squeeze first. That's what we're looking for. That's what we're looking for when it gets to that point. What else we got that I posted on here? So I put the bull bear. Wait. Oh, so let's just the macro side of things. Inside, there's nothing really going on. The macro side of thing with this virus. Okay, I'm not a big macro guy. Okay. Oh, I did that. Hedge funds. Here's the put the call premium. Not much on the total, but it looks like SPY they hit up. So you got to jump and put premium there. This thing was at levels. Oh, here's a good chart, Ani. I posted on my regular Twitter. You probably saw it. Hold on. This is another one we could pay attention to for a squeeze. Hold on. What the hell is it here? So this is the leveraged bearish ETF activity, right? We call it the degenerate bearish ETF activity. All right, so when you see these major spikes and they're really active in these things, they usually lead to a nice squeeze. The ticker? What do you mean the ticker? This is like all those stuff. Oh, you're kidding, Norse. The triple leveraged bearish ETFs. You know what I'm talking about. SQQQ and all that stuff. Yeah, could be, right? I mean, you had some movement already there of one poor day, But usually if it turns into something larger of a drawdown, you get a nice spike above that line here, as you can see, But most of these spikes, sometimes they're a day early, but the majority of the time they'll nail nice squeezes. You know, the big ones especially, they can nail bottoms at times. You know, see, squeezes. At the least, you get squeezes. This is a big one. This was a nice one. This was a squeeze here. You know, sometimes you get these smaller squeezes, but that's a little misleading because sometimes you get that big squeeze and then they fade the next day, right? You get a squeeze, then you get a gap up the next day, and then you fade that to red. But again, squeezes is what we want to play for, and that's what it. But that's the use out of it, squeezes. Right? Bottoms, we're not talking about major bottoms yet. Not that we can't bottom and head to new highs. We're not, we haven't had a major drawdown to get a major bottom. So we shouldn't even be focusing on that yet with one down day. We're looking for snapback squeezes. All right, you can see you guys saw this that I posted? All the epidemics and what the market did 1, 3, 6 months out. Every single one. Pretty crazy. This is on my regular Twitter. I'll post it on private. Well, you could go on my regular Twitter and you guys have access to that. The index put the call. All the put the calls caught a lot of heat Friday because there was a scramble. If you were there watching the flow with me, you could see how much put buying there was. They were scrambling, buying puts everywhere. But look, from a really low point, the index put the call right up there. And this is what was significant. Now, sometimes this leads to larger drawdowns, what I'm hearing, net. This is week over week, weekly change in the index put the call. So they kind of get caught off guard, is what it means. Like, look at this. Talk about getting caught off guard. That's 2015, it looks like. So pretty big spike there. He had the big spikes here, caught off guard. And these are just little spikes throughout. But definitely some put buying again out there, which is always healthy to see. Look at our boy. Forward one eye. I give him credit, man. This is Carney, by the way. He's such a beast, right? And like, I don't know if you guys watched the fight. He has one eye and he can't see, and he's out there fighting like he just started the fight. Look at it. I don't know how they do it, man. I don't know how they look at this. Those of you who don't know, this is Carney. He's a member. He's a member of the Steam Room. So it was a good fight, though. All right. What else we got? Let's go back to the thing here, and then we'll go to some questions. Breath. Oh, Ani, are you out there? Yeah, you're out there. Remember this? We looked at for a buy signal. It was a pretty good buy signal. The Fidelity Funds. I don't know if you remember this. In the big correction, sometimes it gets there. Yeah, so look, you had a top signal this week. But this one, it gets down to 0, screaming buy signal. Screaming buy signal. But you can see, look, there's only been like 3, 4 signals and forever. But you had a sell signal. Okay, just a lot of the longer term, intermediate term sentiment got a little too frothy. And we knew that was coming. Let's talk about sectors, and then we'll talk about names and anything you have on your mind. The reason I think sectors aren't as important right now because we've been looking at this thing for, a few months now because of the rotation. It's been pretty good. With earnings, you really, you're in the hands of the earnings gods right now, right? So it's like basically right now, intraday, you're going to be in the hands of the virus gods. And then overnight, you're going to be in the hands of the earnings gods. So it really, looking at sector sentiment for rotation purposes, I think it's too early in the earnings season process, the virus gods, too early in the earning process. Maybe next week we could start looking at it again. But, underneath the hood, we've been talking about this. Look at this, right? And you know what's amazing? Yeah, and see, like, you see how I'm a big believer in sentiment, and right, I talk like I'm so confident in it. Like, I see signals and I still, don't have the confidence to take action so many times. I'll give you an example of that. Okay. You had the whole rotation thingamajigga, everything get pretty hot, right? And then you had bullish signals at a lot of, well, I'll tell you who did the trade, Mick Elliott. That's what Mick Elliott was talking about. You had bullish signals, utilities, right? REITs got close, right? Housing wasn't quite there yet, but close. You know what I mean? You had a lot of the sectors that were so hot, all of a sudden flashing bullish signals while they rotated elsewhere, and those things heat up. And now look at what was the place to be in. Have you looked at these sectors? Okay, if you rotated into these sectors, okay, if you did that Mick Elliott trade, honestly, you should retire because you nailed this rally perfectly. If you made money, okay, like most of us have done, made a good amount of money throughout the whole rally, we've just been there, okay, we've just gone through. But you started the new year and you said, all right, I got bullish sentiment signals, I got TLT, right? I got, what's the home builder? XHB. I got ITB. I got XLU. And I'm just, some of that money, right? I'm going to cash my chips on all the stuff that's been doing well. And I'm going to take a portion of that money and buy some of the, make a bet on that rotation that Mick Elliott was talking about, right? You had the sentiment for it, flashing bullish signals. Look at the utilities. And it goes to show you how much, like, I know, right? Right here, right? We were talking about how these things may roll over, right? Money coming out of it may roll over. Now, here, you're getting a bullish sentiment signal here, right? And me, even with the sentiment signal, I'm not playing it, but I'm talking about they may roll over. Meanwhile, look at that entry. Look at this. Look at that. And you'd be sitting in these things right now, gravy. Mick Elliott was, what Mick Elliott wanted to do was the opposite, Lotto, of what took place throughout the whole rally. So his premise was the higher yield trade, right? The reflation trade was overdone. And you'll just have a reversion to the mean, at least a reversion to the mean, maybe even more if something happens to have an effect on the economy. Okay? So he wanted to, the two things he wanted to short was financials and what was the other one? Commodities? I think commodities. But anyway, he was short those and he wanted to go long TLT. So he wanted to go long TLT. Yeah, bonds, he was going long, MJ. Because if yields go down, bonds go up. So he wanted to go long TLT, housing, everything that appreciates with low rates. That was his trade. January 1st, he said to put it on. Well, he meant for the whole month of January. I think he started talking about it in December, right? Late December. Anyway, it's just amazing what happened here. Now, here's the thing too, where he got lucky. Okay, he may have caught the reversion to the mean. So, in other words, here's where McElliott was right, I think. But he said that you'll get the reversion of the mean trade, and if you get lucky, he mentioned that if you get lucky, you get more. So basically, he was playing for this. Okay, what he didn't know was coming was exactly the virus. Okay, and that is where I'm going to talk about the virus. The virus is important right now, not because the whole world is going to catch it and croak. Okay, that's not the fear in the markets. That's the fear of the riffraff out there on Twitter. The fear, what the markets are trying to factor in now, okay, you had this whole rally, right, was based off the premise that the economy has bottomed, is showing signs of stabilization, and pricing in a recovery, okay, especially the trade deal, right, in the sake of China and emerging markets. Okay, so now all of a sudden, okay, everything's fine and dandy. There's nothing changed here. Everything's beautiful. Now the virus shows up, okay, and it happens for the new year, festivities and all that shit. So just like SARS and the affluenza, all that stuff, they're going to have an impact on the economy now. You understand? So now all of a sudden, from that reflation thing that people were trying to play for and factor in, now you're going to have a hiccup in the economy and the growth. No doubt about it. Now it's a given, right? They were hoping maybe you contain the virus early enough. Now it's definitely going to have an impact. That's why they're hitting China hard and all these. So the market already is factoring that in. Okay. Eventually, what happens is we start to become aware of that. Okay. And the market's going to already factor that in. Whatever the market feels that it's going to, have a hinder on the economy of, that's what the market's going to factor in. And eventually, you're going to see this thing bottom at some point and turn even before those economic numbers slow down or the virus is contained or anything like that. So that's what you want to look for. The good thing is FXI, EEM, you're going to see it in the flow more than not. You're going to see them tattoo it. You're going to see them tattoo it. So when you see them come in and tattoo it, and a lot of times with decent time, not too far out, they usually go a couple months out. They'll buy ASHR, they'll buy all those things. Like you remember KWeb? Okay, remember how much buying that thing caught? That doesn't catch a lot of buying. Now they've been playing puts. This thing got hit pretty hard. Look. But it could end up being a huge buying opportunity at some point here. The likelihood is it will be. There is a small chance it turns into something larger. All right. But here's the good thing. The good thing is a lot of stuff was overheating out there. All right. And if you want the Fed still in play, not the Fed, I should say central banks in general, if you want the PBOC, which is related to China, right, to start throwing out some stimulus and doing their thing, you couldn't draw up anything better than that. Now China stimulus, without a doubt, comes into play again, without a doubt. So, but that's the fear of the virus right now. Not that it spreads like wildfire and people turn into zombies. Oh my God, are you kidding me? Oh, that's unfortunate. Without even doing it purposely, huh, MJ? And it was looking so good. Maybe she'll get lucky and it bottoms out. Well, then it's her fault. Yeah, it still looks good. It still looks good, but we got to let the market tell us how much of an impact it's going to have. How much of an impact, and you're going to say, oh, but then it doesn't affect us. It always does. It always does. So if China's going to slow down, it's going to have an impact on our markets. Maybe not as large of an impact. The crazy thing about our market is that they're already positioned for it to possibly have an impact on us. They're buying TLT, they're buying housing, they're buying all these things. But the rotation into those groups is so powerful that it holds up our markets, believe it or not. With the addition of software now, the software names in that rotation basket, things they want to buy. Okay, the problem that comes into play for us bulls, okay, is when the buying slows down in Apple, in AMD, all the big names, the tech names, XLU, right? These things are going to get tired. They're not going another month like this, okay? If money doesn't rotate from these things into the other groups that got hit, we're going to have more downside. You know what I mean? We're going to have more downside. That's basically what's going to determine how big of a correction we end up having in this market. If they still don't want to into all the other things that are getting beat up right now, when they give up on these hot sectors and hot names like Apple, AMD, and some of the other stuff, then because what happens is you're going to have wide selling, right? The breadth among selling is going to be pretty deep. They're going to hit everything because they're going to take profit in Apple. They're going to take profit in AMD, right? Tesla. I mean, Jesus Christ, right? If they start taking profit in all these things and they're not rotating that money, they're not buying the other stuff, that's where you're going to see the market come in some more. So, that's why I mentioned to you guys, like for me, this is a perfect time for me to take it easy, because I want to be able to see without a bias what's going on out there. I don't want to miss it. And luckily, usually I get like that when the market got hit in a significant way, right? Usually, like right here, I cut out all the noise. I'm being honest. Like sometimes, like even the steam room, I don't even look at what you guys are talking about. No offense, nothing against you guys, but like I just make it my business to block out all the noise because I want to see, clean signals that things are starting to turn. We have that, we're close to that here already, okay, because the market's not down that much. But there's a lot of things that have been getting whacked out there. Whacked. Right? Like we just looked at even just China. China's been hit for a week now, a good week, where this just started. Okay, and even if you don't like a lot of those names or whatever the case, it's going to give you a lot of information on the overall market. So it's worth paying attention to, even if you don't want to play those names. But it's going to be telling. It's going to be telling. And plus we got the bonus of earnings season. So if you see any of those names, any names, guys, any name off a dip or a pullback, okay, that you see action in, right? You like that name, you were looking for an entry. If you see legitimate sweeper activity in it, and I'm telling you it's a legitimate sweeper, whether I'm playing it or not is irrelevant. You like the name, that's your entry. That's your entry. Yeah, post-earning, you're 100% right, John. Post-earning sweeps is nothing better than for position trades, for swings. There's nothing better because that's your entry. Like, Trey, here's like one remember the TXN, right? Like, you have a little pullback in this now. It's due for it had earnings. You get a pullback, and then they hit this thing like they did when we bought it back here. You know, that's your entry again. You know, that's your entry again. And that's the way, you know, especially like back in the day, that was the way to play the game right, right? So you would catch a rally like this, you would try to take profit. Sometimes you were early, but you would take profit because it was extended, it hit your target. Then you'd get, you know, a pull, and then where it catches that sweeper activity again, if you still like the name, you know, that would be your entry. There's been a lot less of that because just the market's wired differently these days, right? Now, like you guys say, Tesla, Shop, you never get secondary entries in these things. They just keep going. Like here, Shop came out of the B, right? Came out of some consolidation here. So if you had a nice entry here and you took profit, you never had another chance to get in it. Yeah, I played it. See, this is a name that I would have definitely took for a swing on any other environment. I really contemplated doing it Friday, even in this environment. You know, unusual, clever sweepers in a name where they're not buying anything and they're buying big, you know. Day traded it, made a little money, and I took it. Nah, I didn't end up holding it. I try not to hold anything, Tree, just like you said, trying to keep the cash free and you know, try to make a nice dent when the turning point comes, whenever it does. Plan, yeah, that was they were rotating these things. That looks good too. A little pain in the rear end, right, Tree? Up, pause, up, fade. But little by little, looks good. It'll probably end up busting out eventually, and we're all talking to ourselves. When is earnings? In there. A lot of these names, guys, these names, yeah, they look fantastic. Like even this SE, look at it. Look at this thing. This Asia exposure. They couldn't give a rat's ass. Look at this thing. You know, so these names, there's still some decent names set up, but you got earnings. If you didn't have earnings, we could look at them differently. We have earnings, so now you're looking for earnings. You get some, and it doesn't have to be that day. They come in, and you know that's your green light. You know, if you like the name enough, you don't even need them to hit it hard. You want some legitimate action though, you know. But if you like the name a lot, you want to see some buying in it to know that's smarter money than us is putting some money behind it, and that's your window. Like for me, you know, at this point now, you know, especially once we get through this week, the best action out there that they're hitting off earnings weakness is what I'm going to look to swing. Yeah, Netflix, they just tattooed. You know, that was just tattooed. Like I couldn't believe my eyes at one point. I couldn't believe my eyes. You know, because it wasn't like a bullish tape where they're just buying everything. They're known to do that in Netflix, though, right? When they come in a big way. Yeah, like you see, you guys are talking about this Roku. Like you might get a trade in it before earnings, like a little pop squeeze thing. But what you would want a little selling off earnings and some sweeper activity into that, and there's your entry in Roku. You know, there's your entry for a position. Like that's exactly, you know, how you wanted to set up. Because like if it didn't have earnings, any sweeper activity here would be amazing, right? Dead. It's been sideways, little pops here and there, frustrating, bulls and bears. You know, the flow, we haven't seen anything really to get excited over in a while. I think I posted the gamma on it, which looks interesting for earnings. Let's see. Oh, little dip there. So that would agree with what we just said. You want this. See this? So this is, look, see this, how this played out here? I wonder if that's earnings. That's exactly what you would want. Gap down, gamma, completely washed out, and that would be your entry. Right there. That's the blueprint if you could have it your way. Right here. Right there. Especially if they come and hit this, sweepers. Yeah, that's what I mean. There's been like literally exactly little piker bets on both sides of the Roku. Nothing really, and they can hit it hard. Roku's been hit hard in the past when she's been hot. Amazon, let's see. I think Amazon gamma is pretty low now too. Yeah, exactly. So you went from into the other, right? We were talking about this, the highest ever. And that's usually where she rolls over, guys. Remember we were talking about that? Usually where she rolls over. All right, Maria, good luck this week. Yeah, so that's what you want, though. Yep, Ani, like if you see this come down into the neighborhood down here, especially maybe you get a sweep. Yeah, that's where you want to start looking for entries. Yeah, and it's a good time, no, Ani, to keep the powder dry. All right, try to play off some momentum here and there. All right, like we said, we're not going to get rich off it. You make quick hits. Right, some will be losers. Game, and just wait for the better setup. It's not that far away, guys. It's not that far away. Here's Google. Look at this. Look how low Google is, gamma wise. That's pretty low for a little dip like that. Was up there too, like Amazon. Got up there, and just across the board, the whole market, it seems, or the bulk of it, the gamma just started getting chiseled away all over the place. Google caught some call sweeper activity, I think 2 days, right? Friday, and was it Friday? I think it was Friday. When do they report? Are they this week too? Oh, next Monday? Well, the other names might have an impact on it too. So you don't know. That's the problem, earnings, even if that name doesn't have earnings, now these days, people play options in, a peer because the IV is not as junked up just for earnings. You see that all the time. Like, let's say Micron has earnings, they'll play WDC instead. So, even if it doesn't have earnings, when you're right in the heart of earnings season going into a week like this, just assume everything is earnings related. That's the best way to do it. It's the best way to do it. Assume everything's earnings related. You're looking for momentum now. You don't get it, you're out. You get it, you're out, and that's it. And then, like I said, once we get through this week, usually it's the big week. As we get into next week, you'll see even the flow start to really look different. Like the flow this earnings season has been as bad as we've seen in a long time. Really bad. Yeah, John, last week was one of the worst weeks of flow. You see call and put action coming into the same name at the same time. Just awful. I agree, John. Pretty bad. No, you're right. It is pretty bad. So if it's the worst you've seen while you're here, it's up there. Yeah, MJ. It was just, it was a mess. It was a mess. It's not even bullish bearish. You would rather it be either bullish or bearish. When it's so mixed like that, the momentum's just useless. So that's what I'm saying. I'm not saying in a bullish way. Once we get through this week, the flow will be cleaner. It'll start to clean up little by little. Be all bearish, but you will see a pattern. You'll see more pattern. You see more theme. Like, I'll give you an example. This week, what I wanted to try to do, because they've been pretty rock solid outside of Friday, I wanted to play intraday off Niners for scalps. But, I wanted to see some sweeper activity come in off a downside Niner, And, I mean, the flow, I could never tell when buying came in. It was just so sloppy. Yeah, either TNA or sometimes, play this SPXL. I got my partner in crime, MJ, who works with me. You hear me talking to him. He's going to start playing ES for us intraday only. Yeah. But nice and easy, So it takes a lot of my plate too. I told you guys, little by little, building a little team. Anyway, we work best. Like the guys I'm working with now, and that's pretty much the premise and how we got the idea. When I'm calling shit out, like I do to you for you guys, like a lot of you who've been with me a while say the same thing. You hear it in my voice, right? So they say the same thing. Like the best trades they put on, they hear in my voice. Like when I'm excited, when an action looks good. So, now that's what we're doing. We're building a little team here. It takes less of the burden, a lot of the burden off my shoulders pushing buttons, and I can just focus on the action. You know what I mean? Yeah, like you can hear, right? You can hear the excitement in my voice. Like if you're new and you hear me or you see me on private Twitter post about action numerous times, right? Obviously, there's something different about that action. The majority of the action I'll post and you'll never hear me bring it up again. Or most of the time, and with this flow, I won't even talk about it. Exactly, John. I'll repeat it. Exactly. Because that's what I wanted to do with, like, for you guys. What I wanted, my job is not to tell you what to buy and sell, not to tell you how to trade, not to tell you. My job is to tell you what action is special or different than everything else. And then you determine, because each and every one of you is different, whether it's something you want to take advantage of, that sort of thing. No, Tree, anything as I'm calling out live, I'm posting it, because even not just for private Twitter reasons, a lot of times people maybe don't have the microphone on. They're at work, right? Like I got a big mouth. So, they have the volume low, or they're not by their desk, so I make sure anything noteworthy I'm posting, I'm writing. So say it, I'm in the middle of writing it. Yeah, and that's, again, when I'm excited about a trade, a lot of times, I tell you guys the way I'm playing it, I'm buying it and stuff like that. But that's, it's a lot different than giving out buy sell signals. I want you guys to understand what the interpretation of the flow is, and this way, you can decide if it's suitable for you. Right? Some stuff may be day trade, or some stuff may be, longer term stuff. So that's why I try to elaborate on it. Oh, that makes me feel good, Ani, that you read every write-up That makes up for the people who never read any of the write-up. So I appreciate that. Nova Ursa is no signal. I'll post it when I get done with this. The DSI, Tim, I didn't get for Friday yet. I got Thursdays from Friday morning. So DSI was in the 90s, probably came in a bit. Why don't I trust in the money weekly short day swoops? Oh, good question. It depends, AT. I guess it's more experience than anything else. See, weeklies, if a player's playing weeklies, it's a spec bet. Okay? A Sharpie's not making a bet on Netflix playing weeklies, right? He's not betting on the company by playing weeklies. Okay? So if you want to see spec action, if you want to see weekly action, you want to see real spec action. You want to see a guy who's shooting for out of the money calls, but is doing it in an aggressive way. Okay. And he's looking for a nice pop. So if a guy's playing in the money weeklies with 2 days to go to expiration, he probably is just looking for exposure in the name for different reasons. You know, it's not, again, spec action. There's two types of action, right? There's spec action, and then there's a bet on the actual underlying on that name, right? So when we talk about like that Sharpie activity, those guys go in the money a lot of times, deep in the money, and they go out in time. Because what are they trying to? Instead of, or not instead of, but on top of taking an equity position, they're utilizing the leverage in the option market to put on more exposure. You know, so they almost treat it like stock. So he's making a bet on the name a little longer term. You know, spec action, you know, whether they're cheap, they should be cheap if they're weeklies. You know, you just want to see an aggressive nature behind it. You know, you want to see multiple orders. See, the sweeper activity is used so many different ways, AT, by a lot of other people because they're using other things with flow. So I'll just give you a quick example, okay? Let's say the technicals line up for Boeing, right? Like Tim does this a lot, right? Boeing's at a support if you're looking at technicals. And then Boeing catches a sweep, right? Sweepers equal momentum, and that's something that may be your trigger for catching a quick trade in Boeing, okay? So it doesn't matter whether the action was aggressive enough or good looking enough, right? You're using technicals. In addition, you're using the sweepers as confirmation for your technicals, okay? If you're just trading off flow, if you're just trading off sweeper activity like I am, okay, you want to see that aggressive nature, right? One order can mean anything. One order can mean a million different things. But when somebody keeps coming after a line, right, constantly, they're building a position in the line, it only means one thing to us, okay? They are anticipating a move higher. They're anticipating upside momentum in the name. Whether it's a short, protecting his ass, he's stressing urgency, right? He could be short, but he's sweeping the daylights out of calls because he's anticipating a squeeze. Okay, so it doesn't matter if they're aggressive. It doesn't matter if he's short or long. You don't even have to think of that stuff. You know, all that stuff comes into play when you're just one order, right? One little small Boeing sweep can mean anything. So if you're trading off just off sweeper activity, that's not really, you don't want to make those trades your bread and butter. You want the most aggressive activity, right? The best looking activity, that's the stuff you want to pick from. That's why, like, even that top bet list I put at the end of the day, that's like a lot of times when I'll put those aren't names that I'm buying all the time, but that's the action I'm picking from each and every day. Like a lot of times, all my plays, for the most part, my swings are coming from that top bet list. I choose from that pile. Right. Well, BKNG catches one sweep every decade, Tim. So one sweep only means one thing in Priceline. Doesn't mean anything else because they don't play that freaking thing. You know? But I understand your point. Yep, you're right. The unicorn. Anybody else have any questions on anything? Gamma, playbook, flow. All right. So, like, even, hold on one second, guys. Hold on. Yes. Yes. I'm still working here. What's up? Anything wrong? All right. I'll see you in a little bit. Bye bye. So, like, for example, here's the top bet list. Call me during webinars. Yeah. Where am I? And then we'll wrap it up and I'll let you go to your night here. So, like, here's the top bet list from Friday's action. I'm trying to just pick out, and granted, this is earnings and all that stuff, so we're not really looking to pick much from any of these lists. But these were the best looking orders on the day, and I try to pick them out of the rubbish. Hold on, I got a couple of quick. Yeah, this TER does look interesting. This is off post earnings too. But look, it's not much of a pullback here, so maybe you be a little patient. Again, I would probably wait MJ another week or so for swings if that's what you're looking for, just to get out of the earnings crap. I got some questions here. Let's answer these and then we'll wrap it up. How would you consider Friday sell still potentially healthy and much needed? Yeah, I mean, they're really get a clean interpretation or Friday. Hamza, you know what I mean? So if I can't get a clean interpretation, I'm not going to pretend like it means something. Right now, because of earnings season, all the stuff that's been guiding us, right? All the stuff that's been telling us to stick with this rally, okay? About 2 weeks ago, week and a half ago, like I mentioned at the start of the webinar, started to change on us, okay? So in other words, this whole entire move, right? We've been talking about stay bullish, lean bullish, right? Any new sweepers, that's what you want to focus on for swings. We've been saying that this whole rally, okay? And then about a week and a half ago, when the flow started turning as we get close to earnings season, now we're getting a different read, right? It's unclear to us. So that's a good spot to say, okay, we're going into earnings, right? Sentiment getting hot, positioning getting a little too full, the flow starting to really suck. Lighten up, loosen up, right? Get a lot more selective, stay nimble, and let's see what happens. All right. So you don't want to even try to analyze Friday. Let's see. Once we get through this week, things should clear up a little bit. Right now, and I'll leave it on this note, and then we'll wrap it up. I'll let you guys go to your night. Now the play is for the squeeze. That's what we're looking for. If we could catch an intraday, even better. But we're looking to play on the long side. We're looking to play for squeezes. If you want to play the dark side, right, I would focus on intraday, because if there's downside, there's going to be a lot of momentum there. And keep an eye on the sweeper activity. If that whole board is looking red and there's nothing but put sweepers, and you hear me or you see me posting not a call buyer to be found, that's your window, right? That's your window. If sweepers aren't sweeping, the likelihood is there's going to be no momentum to the upside. Right. It means go to the gym. Good call, MJ. But honestly, that's what it means. If I'm not posting call sweepers and I'm telling you there's nobody buying, that means there's no momentum to the upside. There may be little intraday rallies, and they're likely going to fall on their face. Because every significant move, every squeeze with a gusto that's out there will have some decent call sweeper activity behind it. Right? So like Friday, there were times where there was just no buying to be found. So this is the momentum. And you get these little pops, right? But they don't go anywhere. How are they going to go anywhere? If they're not buying into these, they're not going anywhere. So that's what you want to pay attention to. That's what you want to pay attention to. All right, guys. Thanks for stopping by. If you tuned in late, it's on recording. All right, they're always recorded. Again, stay selective, nice and easy. Let's get through 1 week to watch on, and then we'll reevaluate on next Sunday's webinar. All right? Be good, everybody. Good luck.